David Greenberg. David was a NYMEX trader for decades. On top of that, he was the risk management manager for his company on days like this, on both the Persian Gulf Wars and, of course, 9/11 post when the markets finally reopened. David, good to see you. Thank you so much. Quickly explain why margin calls, the phones may be ringing right now to people who borrowed to buy a lot of stock or the commodity.
While today is important, with an 800-point down move, the key is going to be what's going to happen in the next few days. And what sets that up is really the risk managers and the margin calls that are come through. There will be people today in their E-Trade accounts, in their Schwab accounts, in their Morgan Stanley accounts, they're going to get a notice that they need to put more money up for the positions that they have. Because we all know that stocks are on margin, but even more so, commodities have an extremely huge marginal position. So what happens is that now we're tending, around 800 lower. Now is when all the hope traders come in. I hope it goes higher. I hope it bounces. And then what ends up happening, why tomorrow's important, is that you have a few days to get that margin money in. If tomorrow opens up with what we would call a leg down, a lot of the risk managers and the margin managers are going to force people out of their trades, which puts another leg that shoves the market down. And then it could be very interesting to see where it goes, from there.